Hello, traders. Gary Wagner with the Gold Forecast here, 10:30 a.m. Honolulu, Hawaii time. It's the 20th day of January, Thursday, and this is the daily report. A major drop in gold today, trading down now about $20, currently at 13.49, 13.50 in that area. Of course, we did have our stop in at 13.48. We were stopped out. We did take a loss. On today's report, I'm going to be talking to you about my long-term and interim term observations and forecast for gold, all here on today's daily report. On a fundamental basis, there were two basic reasons or rationales that were cited for this large drop in gold. The first is the fact that we had a major rebound in the dollar index, and you can see that quite easily here, a 360-minute dollar index chart. As the market comes down, it does form a base, and of course this is that rebound right in here, and that is off those 2-month lows right here. I've brought up our daily gold chart. This is the spot gold, Forex gold. The second sighting in terms of fundamental news was that last night China's gross domestic product was reported in the fourth quarter as being up almost 10%, 9.8%, and that's on a year-on-year basis, and that was higher than the analysts had been looking for, and it gave way to belief or speculation that the policy, the monetary policy, the authorities there will tighten their monetary policy to reduce domestic consumption. They guard their consumption like a hawk. They want to export and take as little possibly import. Let's go to the technicals, though, because that's where we get some information we can truly look at in a light that mathematics never lies. That's something that I always look at. Fibonacci retracement, that's the first thing that I want to look at. This is from that basic low, 1155, all the way up to this record top here. When we do that, there's two major things that I want to look at. First of all, I felt that that 23% level was fairly critical. And once it broke there, of course, that's our stops were below there protecting us. My belief was that if the market was going to come down and begin to test some lower numbers. In fact, if we were going to enter a correction, and at this point I absolutely believe we are in a corrective phase, we'll talk about that at the end of the broadcast, but if it broke through here, this one real critical area, we want to be real careful and we want to guard what we're looking at over the next cycle. Where's my next projected point? Well, I think it's quite logical that we might, in fact, see this market trade as low as the 38% retracement level, and that takes us to about 1325 in the spot market. So really in between these two areas right now, I don't see a lot of tremendous support, and I feel that the market could easily drift down to these lower areas right in here. Traders, there's absolutely no doubt that today's trading activity, a break over this critical area, is a game changer. There's no doubt about that. As I've said before, I really believe that this was a very, very critical level. We tried to make a play on the upside, and here that fell short. The market did fail, but now it is trading in a critical area because it's absolutely broken below that, which causes me to look at a couple of factors. One, are we in a corrective phase? Well, I talked about this last week, and what I talked about was the fact that there were two things that I noticed that had me very, very concerned. The first thing, that we have, of course, this triple top, and if you look at article on commentary that I wrote for Kitco.com, I talk about the three Buddha top. I had a couple of clients and subscribers actually send me articles on another commentary. I'm going to have to look at the source, but that also talks about this three Buddha top. I have to give that credence because I also pointed that out. But here's what I'm looking at. When the market came down, the first thing that you notice is that this last top is a lower top than this prior top. In other words, a true three-booted top has the highest, or crest, let's call it, at that middle top, let's say. Now, so that we had a lower high, and that was the first thing to me that's significant of a market that's probably correcting. The second thing that I noticed is when that market came down, and that's this doji that we saw right in here, it did form a new low. In other words, this low here is absolutely below this low. So the market came back up a little bit, and we are now again making a new low. So what would be a logical sense in terms of coloring or Elliott wave count for that? And I will have to say this. My belief is this triple top was an extended impulse phase, 3, 4, 5, 6, 7, 8, up to 9. You can get a full 9 count. And once that happened, we are now, I believe, in a corrective phase. And this is that A wave, the first wave down. We should get a B wave up. Once this finishes, and then a final C wave down. If it's flat, it will just meet it. If it's more than flat, it will make a new low, and that will end the end of the corrective phase. Time-wise, it's very, very hard to predict time. We're going to have to look at the action here. But there's going to be a couple of very, very good trades that we can work with. You know that I'm hesitant about shorting the market, but I do consider it when we have identified corrective phases in the market. But what I do want to do is I want to see where this market wants to trade to. And I'm not suggesting that these are the areas that they will go to, but these are logical corrections in terms of an Elliott wave, and these are areas, if in fact, let's say the market does move to these are areas that we absolutely want to look at. The first major area we just talked about, that's at 1325. That's right in here. And if it goes down and continues to go lower than that, the 50% retracement area is just at 1300. It's 1296. Do I think the market's going to trade that low? Personally not. But we're going to have to see where this market wants to go, because my belief is now, once we have broken through this critical support area, unless it's what I'll call a fake out, meaning it's going to make everyone believe it's going lower and then just veer up. If we are in a true corrective phase, this market has a real opportunity to head to about the 1325 area. We will have to see in the next days and weeks in trading. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you tomorrow for the weekly review. Bye-bye.